Moody's has maintained its rating for France following downgrades by Fitch, DBRS and S&P Global. But the agency revised its outlook for the country from stable to negative. So for more, I'm pleased to say Charlotte joins us in the studio. So Charlotte, it maintained the credit outlook or credit rating, but cut the outlook here from stable to negative. So walk us through that decision and why it didn't follow the moves that the agencies Fitch and S&P had made with the downgrade.
Yeah, well, I guess because it had its outlook to stable before, they had an extra step before cutting it to single A like the other agencies. So giving them maybe a little bit of time there potentially to see what the local government does. But certainly, like the other agencies, they're talking about the political instability risk, saying hampering the government's ability to address key policy challenges such as an elevated fiscal deficit. So here the same thinking that other agencies for their downgrade. And of course, we had the response from the economy minister, Monsieur Lescure, talking about how the outlook reflects the absolute necessity of building a collective path towards a budgetary compromise. So we are in the middle of the debate for the budget. So, we got there because the Le Cornu 2.0 government made a deal kind of with the socialists to suspend the pension reform in order to get their support until after the 2027 presidential election. Of course, this will have a cost. It will be 400 million euros in 26 and 1.8 billion euros in 27. So Le Cornu, when he accepted to suspend the pension reform, said that this must be compensated by savings there. So now around the budget, they're looking at where to increase the taxes, when to find that extra money. And that's where it's becoming more difficult because no one wants to increase taxes. They're already very elevated. So the conversation around the wealthy tax is back on the table. So you had the Zuckman tax that's been very much in the headlines recently. There was a proposal by a French economist to tax fortunes above 100 million euros to pay a minimum of 2% on their assets. And that was across the board. So no exception. That would include their companies, shared companies and unrealized gains. So that was kind of complicated there. They said that would impact the tech in particular, force them to sell some stakes in their companies. So the socialists are proposing a softer version of that. So still taxing the wealthiest, to say for wealth exceeding 10 million euros to pay taxes for around 3% of their fortune, but say exemptions for innovative and family-owned companies. So the debate is centered around this. Now, Le Cornu, the socialists say, we want some sort of wealthy tax. This is our proposal. They say otherwise, and they come back on Friday, a bit like a grenade into the political debate for a little bit more of quiet, that they could topple the government if there's no wealth tax on the table in the budget. So the debate around this has been delayed slightly. It was supposed to be this weekend. No agreement around this because of other things that took more time. So they will happen until in the middle of this week. So the uncertainty will continue hanging until we see whether a wealth tax can be voted or not, whether the local new government come to an agreement with the socialists.
Yes, certainly a lot of uncertainty on that wealth tax. Now, let's bring in Sabrina Khanniche, the senior economist at Pictet Asset Management, for more. So, Sabrina, let's first of all get your reaction to Moody's holding off on a downgrade here, but cutting the outlook, and Moody's being one of the few agencies that still has a double A rating on France. What was your reaction overall?
Well, indeed, as very well explained before, the fact that Moody's decided to maintain the rating of France, but at the same time downgrading the outlook from stable to negative, reflects the main reason advanced by other rating agencies in the sense that political uncertainty, and this is what France risks, prolonged political uncertainty and fiscal instability. So which means that the ability of France to commit to medium-term fiscal consolidation is at risk, and which means that the ability of France to reduce fiscal deficit is indeed impaired.
And how much of this negative outlook, how much do you think that reflects actually economic fundamentals, and how much of it is the political instability?
Well, in fact, if you look at the economic activity, so France has a lot of strength. So France is strong in terms of AI, in terms of defense, in terms of energy, in terms of infrastructure. It's a well-diversified economy, and the capital market is pretty large. But at the same time, if you look at the reforms that have been implemented by Macron since 2017, so supply-side reforms, so which implied a lower tax rates on corporate in order to increase competitiveness and to boost gross growth potential. At the same time, he also announced some labor market reform and some measures to support purchasing power. But overall, growth potential has failed to increase. So the expected outcome in terms of growth has been weak. So which means that a fiscal deficit has increased. So it reached 5.8% in 2024, expected to decline to 5.4%. But just taking the fiscal deficit within the Eurozone, France shows the widest fiscal deficit because at the same time, with tax cuts, the tax cuts were not matched with spending control.
Sabrina, may I ask you about the wealth tax, because this seems to be the condition now potentially for the Le Cornu, the second Le Cornu government to survive. So the Zuckman tax had been, discussed a lot in the recent weeks. The softer proposal from the socialists there to still adopt some sort of wealth tax. How do you see, what is an acceptable option potentially for the government that would not damage the economy, potentially investment, and will have some capital flight to a certain extent?
Yes, so that's a very good point. And indeed, as you discussed, as you described before, the budget discussions are pretty tough. So in fact, if you look at what every party is asking, and in particular the Socialist Party, which has now hardened in stance of fiscal revenue, which is what is discussed now at the National Assembly in terms of increasing taxes on the high net worth individual for social justice. So this is what the Socialist Party is asking. So, and we can see that now the government has emphasized compromise discussion in order to maintain fiscal consolidation and political stability. So this is really a fine line between delivering on social justice, while at the same time maintaining political stability and show some kind of commitment to fiscal consolidation.